Your May 2026 CPP and OAS payment is confirmed. The date is locked, the amounts have changed, and there are details in this update that directly affect how much money lands in your bank account and when. But beyond the payment date, there are things happening with GIS eligibility, the OAS clawback, the CPP enhancement, and common errors in benefit calculations that are costing Canadian seniors real money right now. We are going through all of it today in plain language. The facts you need, explained clearly with the real numbers. The confirmed CPP and OAS payment date for May 2026 is Wednesday, May 28th. That is the date Service Canada has confirmed for direct deposit payments. If you receive a paper check in the mail rather than direct deposit, your check will be mailed several business days before that date, but physical delivery depends on Canada Post in your area. For seniors in rural communities, allow 2 to 4 additional business days for your check to arrive after the 28th. Why the 28th and not earlier in the month? This is a question that causes confusion every year. CPP and OAS are not paid on the first of the month. They are paid on the last business day of the month, with adjustments made when that day falls on a weekend or statutory holiday. In May 2026, May 29th is Thursday, May 30th is Friday, May 31st is Saturday, and June 1st is Sunday. The government processes the payment on the last appropriate business day before month end, which falls on the 28th. If you do not see your deposit by the end of business on May 28th, do not act immediately. Banks sometimes post government deposits as late as midnight. Give it until the morning of May 29th. If by noon on May 29th your deposit still has not appeared, contact Service Canada at 1-800-2779-914 or contact your bank directly to trace the payment. Now let us talk about the amounts, because this is what matters most to most people. Canada Pension Plan. The maximum monthly CPP retirement pension for someone who started collecting at age 65 in 2026 is approximately $1,364.60 per month. However, the average CPP payment that most Canadians actually receive is significantly lower than the maximum, typically in the range of $760 to $830 per month. This is because CPP is calculated based on how much you contributed during your working years and for how many years those contributions were made. Time away from work, part-time employment, years of lower income, and the age at which you started CPP all affect your personal monthly amount. If you started CPP before age 65, your payment is permanently reduced by 0.6% for every month before your 65th birthday. Starting at exactly age 60 months early, results in a permanent 36% reduction. On the other hand, if you delayed CPP past age 65, your payment increases by 0.7% per month, up to a maximum increase of 42% at age 70. Your May 2026 payment is your personal amount based on your own contribution history and start date. The best place to confirm your exact expected amount is your My Service Canada account online or by calling Service Canada directly. Old Age Security, OAS, is different from CPP. It is not based on your work history. It is a flat benefit paid to Canadians who are 65 or older and who meet Canadian residency requirements. For the April to June 2026 quarter, which includes your May 2026 payment, the maximum OAS pension for seniors age 65 to 74 is $727.67 per month. For seniors age 75 and older, the amount is higher. In July 2022, the federal government permanently increased OAS for those 75 and older by 10%. Seniors 75 and older are now receiving a maximum of approximately $800.44 per month in OAS for this quarter. These amounts are reviewed and adjusted quarterly based on the Consumer Price Index. When inflation rises, OAS rises with it. When inflation falls, OAS stays where it is. It never goes down. That downward protection is written into the legislation. Now, let us talk about a benefit that too many seniors either do not know about or have never applied for. It is the Guaranteed Income Supplement, or GIS, and it is leaving thousands of dollars on the table for eligible seniors across Canada every single year. GIS is a non-taxable monthly payment added on top of OAS. It is designed for low-income seniors, and the amounts are substantial. The maximum monthly GIS for a single senior in 2026 is approximately $1,086 per month. That is more than $1,000 extra every month, tax-free. For a senior living on CPP and OAS alone, this amount is genuinely life-changing. It covers groceries, medication, heating, rent, the essential expenses that a modest pension may not fully stretch to cover. To be eligible for GIS in 2026, you must be 65 or older, be a Canadian resident, already be receiving OAS, and have an annual income below the threshold for your marital situation. For a single senior, your annual income, not counting OAS itself, must be below approximately $22,560 to qualify for at least partial GIS. For a couple where both partners receive OAS, the combined income threshold is approximately $29,360. For a couple where only one partner receives OAS, the income threshold for the OAS recipient is approximately $52,848. These thresholds are adjusted annually for inflation. If you are living primarily on CPP and OAS and your income is modest, take 10 minutes today and check whether you qualify for GIS. You can do this through your My Service Canada account online or by calling 1-800-277-9914. GIS is not automatic for most people. If you have not applied and you qualify, you are leaving real money behind. If you have a parent, grandparent, or neighbor who is a senior living on a fixed income, please share this information with them. Hundreds of thousands of eligible Canadian seniors are not receiving GIS right now simply because they did not know they qualified or because no one ever told them to apply. Now let us address the OAS clawback, because this is a topic that blindsides seniors every year, and it deserves a clear, direct explanation. The OAS recovery tax, most commonly called the clawback, works like this. If your individual net income for a year exceeds a certain threshold, the government recovers a portion of your OAS at a rate of 15 cents for every dollar above that threshold. For the 2025 tax year, which affects your 2026 OAS payments, the clawback threshold is $99,970. If your net income in 2025 exceeded that amount, your 2026 OAS payments will be reduced automatically throughout the year to recover the appropriate amount. OAS is fully eliminated when income reaches approximately $148,650. Most seniors are nowhere near these numbers. But if you have significant RRSP or RRIF withdrawals, rental income, investment income, capital gains, or a generous workplace pension alongside your CPP and OAS, it is worth calculating your net income carefully. If the clawback has affected you in past years, a conversation with a tax professional about income splitting strategies, TFSA withdrawals, which do not count as income and never trigger the clawback, or the timing of RRSP and RRIF withdrawals could recover real money. The clawback is not inevitable for everyone near the threshold. With proper planning, it can often be reduced or avoided entirely through legal and straightforward strategies. Let us also address the CPP enhancement, because there is one element of it that affects current retirees directly and that most people have never heard of. The federal government began gradually enhancing CPP in 2019. For people who are already retired and collecting CPP, this enhancement does not increase your existing monthly payment. Your amount was set when you began collecting, But if you were still working part-time after retiring and making CPP contributions after 2019, you may be entitled to what is called the Post-Retirement Benefit, or PRB. This is a small additional monthly amount added on top of your existing CPP, generated by contributions you made while working in retirement. Many seniors who worked even a few years after starting CPP are not receiving their PRB simply because they have never checked whether it was applied. Your My Service Canada account will show your CPP statement of contributions and whether any post-retirement benefit has been added. If you contributed while working after retirement and your monthly amount has not changed from its original level, it is worth calling Service Canada to ask specifically whether your PRB has been calculated and applied. Here are the remaining confirmed CPP and OAS payment dates for 2026. Mark these in your calendar now: June 2026, Tuesday, June 26th, July 2026, Wednesday, July 29th, August 2026, Wednesday, August 27th, September 2026, Tuesday, September 29th, October 2026, Wednesday, October 28th, November 2026, Tuesday, November 26th, December 2026, Wednesday, December 22nd. Notice that December is earlier than usual. The government processes December payments before Christmas to ensure seniors have their money for the holiday season. December 22nd is the date to mark. Do not wait for a late December deposit that will not come. If your May 28th payment does not arrive, or if the amount looks incorrect, here is the step-by-step response. Wait until the morning of May 29th before taking action. Deposits sometimes post overnight. Then check your My Service Canada account, which will show the payment that was issued, the amount, and the date. If a payment was issued but has not appeared in your bank, the issue may be with your bank's processing, not with Service Canada. Contact your bank first and ask them to confirm whether a direct deposit from Service Canada is pending or has posted. If your bank confirms they have received nothing from Service Canada, call Service Canada at 1-800-277-9914 with your social insurance number ready. They can trace the payment and identify what happened. If the amount is wrong, do not simply accept it. Ask Service Canada to explain the calculation. You have the right to request a review of your benefit amount, and if you disagree with their determination, you have the right to appeal. The appeal process is free and does not require a lawyer. Common reasons a payment might be incorrect include a change in marital status that was not updated with Service Canada, income reported to the CRA that affected GIS eligibility, a banking information change that did not process correctly, or a calculation error. All of these are correctable, but you have to make the call to initiate the correction. If you are still receiving your payments by paper check in the mail, switching to direct deposit is the single most practical improvement you can make to how you receive your pension income. Checks can be lost, checks can be stolen from mailboxes. In bad weather or during periods of postal disruption, delivery can be delayed by days. Direct deposit means your money goes directly into your bank account on payment day, securely, automatically, without you needing to be home or at the bank. Setting up direct deposit for your CPP and OAS is free. You can do it through your My Service Canada account online by calling 1-800-277-9914 or by visiting a Service Canada Centre in person. You will need your bank account number, institution number, and transit number, all of which appear along the bottom of a check from your checking account. Once set up, it takes 1 to 2 payment cycles to take effect, and your money will arrive reliably on every payment date going forward. Let us also name the 5 most common mistakes that cost Canadian seniors real money, because avoiding them is straightforward once you know what they are. The first is taking CPP too early without fully thinking through the long-term math. Taking CPP at 60 instead of 65 means a permanent 36% reduction in your monthly payment. If you live to 85 or 90, the total lifetime cost of that early decision is substantial. If your health is good and you have other income to cover your expenses in your early 60s, waiting even a few years can significantly increase your total lifetime CPP income. The second is not applying for GIS. GIS is not automatic for most seniors. If you are low income and you have never applied, you may be leaving over $1,000 per month in non-taxable income unclaimed. Apply as soon as possible. The third is failing to report changes in marital status to Service Canada. If a spouse passes away, if you separate, or if you begin a new common law partnership, your benefit entitlements can change significantly. Failing to notify Service Canada can result in receiving the wrong amount and being required to repay overpayments later. The fourth is not exploring pension sharing. If you and your spouse both receive CPP, you may be able to share a portion of your CPP retirement pensions with each other. This can reduce your combined tax burden as a couple if one of you is in a higher tax bracket. It is worth discussing with a tax professional. The fifth is assuming your benefit amount is correct and never checking. Service Canada processes millions of payments. Errors occur. If your payment ever seems lower than it should be, you are entitled to ask for a clear explanation of how your amount was calculated and to appeal if a mistake was made. The My Service Canada account, sometimes called MSCA, is the most useful tool available to Canadian seniors for managing their CPP and OAS. Through this free and secure online account, you can view your CPP statement of contributions showing every year you contributed and how much, see your estimated CPP retirement pension at different starting ages, view your current OAS and GIS payment information, update your banking details for direct deposit, and apply for certain benefits online. To create or access your account, go to the official Service Canada website and sign in using a GC key or through your bank if it is a registered sign-in partner. If you are not comfortable with online tools, a trusted family member can help you set it up, or you can visit a Service Canada Centre in person where staff will walk you through it at no charge. There is one more topic that is worth covering before we close, and that is what to do if you are approaching a major financial decision this year that could affect your CPP, OAS, or GIS going forward. The three most common situations where seniors make decisions without realizing the pension implications are selling a property, making a large RRSP or RRIF withdrawal, and beginning or ending a common law partnership. Selling a property, whether a rental property, a vacation home, or even a principal residence in some situations, can generate a capital gain that counts toward your net annual income. If that gain pushes your total income above the OAS clawback threshold of $99,970 for 2025, your OAS for the following benefit year will be reduced. This does not mean you should avoid selling property. It means you should understand the income impact in advance and, where possible, plan the timing and structure of the transaction with a tax professional who can model the OAS effect. A large RRSP or RRIF withdrawal can have the same effect. Every dollar withdrawn from a registered account is taxable income in the year it is received. If a lump sum withdrawal pushes you above the clawback threshold, the OAS reduction follows automatically the next year without any notice. A TFSA withdrawal, by contrast, does not count as income at all and will never affect your OAS. Beginning or ending a common law partnership also affects your GIS and allowance entitlements, because GIS eligibility and amounts are calculated partly on household income. If you begin living with a new partner, Service Canada needs to know so your GIS can be recalculated. If a partnership ends, the same applies. Getting this right ensures you are receiving the correct amount from month one, rather than discovering months later that you were overpaid or underpaid and having to deal with adjustments. All three situations share a common thread. The consequences for your pension income are manageable with advanced knowledge. A short conversation with Service Canada or a financial advisor before a major financial decision is always worth the time. One final note on GIS. If you applied in a prior year and were told you did not qualify, your circumstances may have changed. A reduction in income, the end of part-time work, or the loss of a spouse may mean you now qualify. GIS eligibility is recalculated every July based on your previous year's tax return. If your 2025 income was lower than in prior years, your filed return may open the door to GIS entitlement beginning in July 2026. Your retirement income is not charity. CPP is money you contributed to over an entire working life. OAS and GIS exist because Canadian society made a commitment to ensuring that older Canadians can live with dignity. Every dollar you are entitled to is yours. Claim it fully, verify it regularly, and never leave money on the table simply because no one told you it was available. Leave your question in the comments below. If you have never been able to get a clear answer about your CPP calculation, your GIS eligibility, the OAS clawback, or anything else about your retirement income, write it in the comments. Every comment is read and responses are given. If today gave you something useful, share it with a senior in your life who needs this information. Subscribe and turn on notifications. When payment dates are confirmed, when benefit amounts are updated, and when anything changes that affects your retirement income, you will hear about it here first in plain language with real numbers. This is Wealth Years Canada.